It will be appropriate to raise our target range for the federal funds rate at the March meeting.
Whoever's on the sanction list, they won't be able to use our platform. Whoever's not, they can.
If you're making $1 from Russia right now, I'd call it blood money.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition, everyone. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Russian forces advance in southern Ukraine. Moscow's invasion in the north appears to have stalled outside of Kyiv. The refugee crisis worsens. The UN estimates that more than 1 million people have fled Ukraine in the past week. And Jay Powell says he's keeping an eye on the impact of the war. But the Fed chair also plows ahead on rate hikes. And finally, oil hits its 2008 high. The Russian invasion upends the market. Brent crude tests the $120 barrier. Well, let's check in on the markets. And I have to say, in the last half an hour, we had a pretty stark reversal when it comes to a lot of the equities. Overall, we were gaining. Now they're pretty much flat. Now, European stocks flat, a little bit of volatility. Unclear exactly what they're nervous about, but it must be energy prices. Maybe they're pricing in further sanctions, or certainly they're just looking at the military offensive and trying to see how this ends. Basic resources, the story of the week when it comes to the markets, gaining some 3.2% overall, but we're seeing record highs on zinc. We're seeing Brent also possibly touching 120. If you look at the zinc, it did briefly touch 4,000. This is something huge. We don't often speak about zinc, but again, this is catalytic converters. It's used, of course, in a range of things that could make not only inflation much higher, but something that will really hurt. For example, fertilizer is something that we don't talk about very often, but because Russia and Ukraine make so much of it at a cheaper price, it could impact, of course, farmers that right now are looking at replanting some of the crops. Now, European natural gas futures rising to a record, and you can see the spike. We brought it back to last year to the early 2021, and you can see the impact. It's gone from about 25 to 200 right now. That will have an impact on travel companies, will have an impact, of course, on how we heat our homes and household spending as well. Now, the UN says at least 1 million refugees have now fled Ukraine since the Russian invasion began a week ago, mostly to neighboring European countries. This as fighting in Kiev and Kharkiv continue.
It hasn't been decided yet what would happen if the Russians withdrew. Again, that'd be part of whatever kind of diplomacy would unwind the crisis in Ukraine. Sadly, this, as you say, is a hypothetical question. We see no signs, unfortunately, that the Russians have any intention of withdrawing right now. And indeed, their military operations in Ukraine continue to escalate.
Meanwhile, the French President Emmanuel Macron offers support for Ukraine while acknowledging that the coming days will most probably be increasingly tougher.
Hundreds of Ukrainian civilians have already been killed. Women and children were killed again today. The coming days will most probably be increasingly tougher.
Now, for more, Aggie Cantrell joins us at the Medica border crossing in southeast Poland, and our Europe correspondent Maria Tadeo also joins us for the situation militarily on the ground. So, Aggie, what's it like, first of all, at the border as refugees try to cross in?
Hi, Francine. Yes, we're seeing refugees come across, many on foot, many in cars, coming across as a steady flow all morning this morning. And we're also seeing that as the fighting is intensifying and targeting civilian areas within Ukraine, we're also hearing that there are likely to be much greater flows coming over the border in the coming weeks. And I think it's important to note that with the new potential talks that may take place, a key part of those talks is establishing humanitarian corridors in Ukraine in order to make sure that supplies such as medical supplies and also humanitarian aid workers would be able to get to badly hit areas.
And Maria, there's been reports of more talks between Russia and Ukraine being held in Belarus today. What do we know about that?
Yes, Francina, remember there has been a huge back and forth because the Ukrainian delegation says that for them it's going to be very difficult to exit the capital if Russia continues to bomb the capital city of Kyiv in Ukraine. And they also worry about the implications that another round of talks in Belarus, which is de facto in many ways already a puppet state for Vladimir Putin. We have seen military operations from Belarus launched into the country. Now, even if they agreed on a time and place and this goes ahead, it is worth pointing out, and this is very important, that these are two countries that are far apart in terms of what they want to achieve from these talks. The Ukrainians say they want to talk predominantly about a ceasefire, and they want to continue with the process to enter the European Union. When you speak to the Russians, they say their goals have not really changed. That is, denazify the Ukrainian government. They continue to use that expression. It means they want to see a different government in Kyiv. They also talk about Ukraine giving up weapons. It is a risk for Russia's security. They argue, and they also believe that the NATO and EU membership bid should end. It poses a risk to Russia. So unless those red lines move, it's very difficult to see how you get to anything that looks like a diplomatic resolution to this, Francine.
Thank you so much, both of you, for joining us. Aggie Cantrell on the ground in Poland, Maria Tadeo in Brussels. Now, we're also seeing scorching hot commodities, so let's check on what exactly we're looking at. This goes from wheat to, of course, some of the metals and energy prices as well. I'm looking at zinc. Zinc is something that we don't often talk about, but it reached its highest since 2007. Other industrial metals extending this powerful rally, really fueled by this trade turmoil, but also rising energy costs amid Russia's increasing economic isolation. Look at natural gas futures gaining some 11% in today's trading session. Overall, the commodity index, the Bloomberg commodity index, one of the biggest gainers, gaining some 2.2%. Now, for the market reaction, joining us now is Christina Aquino, our markets editor. Christine, we need to talk, of course, about the freezing of assets in Russia and also some of the indices being kicked out of the MSCI and others. But if you look at the commodities, it's unclear if what's already priced in is further sanctions, or they're just taking stock of what we've had so far.
Yeah, Francine, I think when it comes to taking a look at the commodity move today, it really is moving into this new phase now of realization in markets that this will be a prolonged conflict, and this will have very, very big implications for the price of energy and for the price of food. Russia and Ukraine, of course, very much at the front and center of those commodity complexes, energy and food. And now that we're seeing really no signs of de-escalation in the conflict, in fact, more escalation, it really is dawning on investors that this will have such a huge impact on the price of commodities. And I think that's what we're seeing now.
Christine, is this why we're seeing quite a lot of volatility? So we started the day off, undecided. Then we had stocks up some 0.5% in Europe, and now we're back down. Are they also trying to make more sense of what Fed Jay Powell said yesterday?
Absolutely, Francine. I think it's a lot of catalysts that markets are trying to chew through at the moment. Of course, yeah, we heard from Powell overnight saying that they are committed to a rate hike in March and potentially flagging a 50 basis point move. That is unprecedented, of course. And we are seeing that reaction playing through in terms of Fed pricing. There are some contracts later on this year showing that possibility of a 50 basis point rate hike. But of course, that's pairing a little bit this morning as we head into the European trading day. I think what we're also seeing in terms of Europe and UK rates pricing, very, very interesting. The UK, for instance, once again, traders there are pricing 6 25 basis point rate hikes from the BOE for the first time since Thursday.
Chrissy, I mean, a 50 basis point hikes is really punchy if we're looking at stagflation. I mean, this could be a policy mistake.
Absolutely, Francine. And I think that risk, while that was a risk even earlier in February, it's even more so now because the stakes have really risen, both in terms of the potential hits to growth, but also in terms of really those inflationary pressures. We're not just looking at goods inflation, we're also looking at energy and food inflation because of the Russia-Ukraine situation.
Christine, thank you so much. As always, our Christina Aquino there, our markets editor, making sense of some of these moves. Coming up, Jay Powell sees a rate liftoff in March. The Fed chair also keeping an eye, of course, on Ukraine. That's coming up next. This is Bloomberg.
Given the current situation, we need to move carefully. The near-term effects on the U.S. economy of the invasion of Ukraine remain highly uncertain. We will need to be nimble in responding to incoming data and the evolving outlook. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. To the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings. We will use our tools to add to financial stability, not to create uncertainty.
Federal Reserve Chair Jay Powell there saying the central bank expects to raise interest rates later this month. Now, that's in a bid to tackle hot inflation amid a tight labor market, while Russia's invasion of Ukraine, of course, has added uncertainty to the U.S. economy. Now, let's get straight to Peter Shafrick, global macro strategist at RBC Capital Markets. Peter, first of all, this changes everything. With the invasion of Ukraine and the sanctions, it changes the Fed's perspective and it changes the ECB's perspective. Are we looking at stagflation worldwide?
Well, first of all, good morning, Francine, and thanks for having me on. So, I mean, stagflation is a very strong word, but clearly this is a stagflationary impulse. When we look at sort of how it transmits into the various economies, I would identify at the very least three sort of direct trade links, and then certainly the indirect links through oil and gas, and then potentially sort of financial exposure. And it's very clear sort of that the euro area and with that the ECB is just much more exposed. We have more direct trade links. The European banks have more exposure. It's now sort of there's some mild contagion already into the other Eastern European countries where there is exposure. So it just feels so much more closer to home for the ECB. And when you look a little bit further afield, the further west you go, then obviously the exposure is smaller, but the principles apply all the same.
So what does it mean for ECB dynamics? How will Christine Lagarde be looking at this right now?
I mean, first of all, we heard it already. There's, I think Rain said it. There's a time for reflection here. So I think the announcements that were supposed to come as regards the APP or any other future policy in March, they must be off the table. I certainly don't think that they will happen. In fact, I think they probably have to shift a lot of their planned tightening further out. We have just changed our call. We don't think that rate hikes will be coming this year at all. And when you look at it, I mean, it's very difficult to quantify it, but the economy was bound to slow somewhat in the second half anyway. And with all the impacts that we're now having, as I just mentioned, direct and indirect, it's bound to be even more exaggerated. So I think it's very difficult for the ECB to hike in this environment.
What does it mean for the Fed, actually? We heard, Peter, from Jay Powell yesterday. We also have a great chart looking at the financial conditions tightening in the U.S. Have you changed how many times you think the Fed will hike?
Well, in fact, we have. But in fact, we had already 4 in our profile, and we think that from everything that Powell has said, they're probably going to do even a little bit more. I mean, the situation in the U.S. is different. I mean, the direct channels, they're much smaller. The indirect channels, we'll have to see. And one of the key things that's also true in the U.S. as it is here in Europe is that high oil prices squeeze disposable income. And we know that particularly the lower income brackets, they already feel the pinch. But then the Fed has indicated that it is willing to go more aggressively. By the way, I think the Bank of England is sort of walking a similar tightrope here. So, but again, I think we'll have to see what the indirect impacts are, whereas in Europe, the direct impacts are larger.
Peter, give me a sense of what this all means for, and I know this is longer term, but I guess it's a good time as any for investors trying to understand how that shifts the dynamic for China.
I mean, for China, it's obviously also very, very difficult because on the one hand, politically they want to side with Russia. There's a lot has been said about sort of that they want to see how the West is reacting. But on the other hand, it's a very large economy, and they're very dependent on producing a lot of goods for the rest of the world. So clearly, sort of the rest of the world going into, I don't want to call it a recession, but sort of in a lower growth environment, that's not good for them. And certainly, we've seen that they're trying to moderate here. But I mean, they've got their own problems in their own economy already anyway, because of COVID, because of leverage, because of all the other things that are going on. So the last thing they probably need is a significant slowdown in the world economy and the global economy. And therefore, I think they're trying to moderate here. But whether that can be successful is in my mind, is very unclear.
So is there something that you look at? I know there's, we look at the credit markets, we look at a lot of the bond volatility, we worry about liquidity. Is there a data point that's your go-to given all of the uncertainty right now?
I mean, it's not necessarily a data point, but if you allow me to take a step back, I do think it shifts a lot of things, particularly for Europe. I mean, I actually think that the sort of political scene is changing in Europe wholesale. It's very difficult in my mind for all of these right-wing politicians to sort of have the European breakup story still as one of their key things. So I think that's falling by the wayside. So I think that's changing. So the political mood, in my mind, is very important to gauge. But as you mentioned, markets, I think the credit market, in my mind, is really one of the things to watch, because we've seen credit being under pressure. We know that a lot of corporates now not only have exposure to Russia that they potentially have to write off, but also can't deliver into that market into the future, which is obviously taking some of their earnings away. So I think the credit market, in my mind, is the linchpin, is the most vulnerable part here.
Peter, thank you so much, as always. Peter Schaffrick, there, global macro strategist at RBC Capital Markets, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russian billionaire Roman Abramovich is to sell Chelsea Football Club with the aim of donating the proceeds to victims of the war in Ukraine. The London club's fortunes have been transformed since his 2003 takeover. It's reported Abramovich is seeking bids of at least £3 billion for the business. Now, Russia's credit rating has been cut to junk by both Moody's and Fitch Ratings as risks mount that sanctions could undermine its capability and willingness to service debt. Moody's downgraded Russia's long-term foreign debt rating from Baa3 to B3. Fitch slashed Russia's 6 levels and placed its rating on negative watch, citing weakening public finances, slowing growth and elevated geopolitical risk. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, we're also getting some pictures out of Romania, where we're hearing, of course, Madame von der Leyen talking. We also heard from the Romanian president speaking a short while ago. I think we have the live pictures. If so, we'll go to it. And the Romanian president moments ago just saying that the EU must end dependency on Russian gas. That's according to the Romanian president. We'll hear what von der Leyen has to say, and we'll get back to that shortly. Coming up, oil driving commodities' biggest week in almost 50 years. We take a look at the impact of both sanctions and the Iran deal. That's coming up next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're, of course, looking at Budapest, where we hear both from President of the Commission, Ursula von der Leyen, and the Romanian president talking about refugees. The president, of course, of that country saying that he will do what he can in terms of helping with the refugee flow. Now, oil soaring as investors shun Russian crude prior to the invasion of Ukraine. The Iran nuclear deal was one of the key drivers for the oil market. Now, to discuss the latest on Iran, we have Golnar Montevalli, who leads our Iran coverage. Golnar, as always, thank you so much for joining us. What's the latest from the talks in Vienna?
So we had a very interesting development overnight. The head of the UN's IAEA, the UN's nuclear watchdog, is set to travel to Tehran on Saturday. That's quite a key development because it shows that negotiators are very determined still to try and get a deal while they can, because these talks have been really on the edge for the past week. We had a moment a couple of nights ago where they were very close to collapse, according to some sources. So everything is still very much hinging on Iran's a particular demand that Iran has, that questions over its past atomic activities be closed, that those files and concerns about what it's done in the past be settled. And that's something that the IAEA feels that it cannot do because it questions the institution's independence. It feels that it compromises its independence, and other delegates in the talks are also pushing back against that. But obviously we're at a stage where by next week, if we get a deal, that would be quite significant for oil prices.
So, Golnar, how likely is it that we get this deal?
It's a very difficult question to answer. Everything hinges so much on one or two things that have been extremely tricky in these talks. Right now, with this trip happening on Saturday with the IAEA, it looks more likely now. But we're looking at, again, talks pushing into next week, I think.
Yeah.
So it's going to be crucial.
Ghosn, thank you so much. Ghosn Montevalli there from Vienna. We're also getting some breaking news out of the Russian foreign minister, Mr. Lavrov, saying that the Russian and Ukrainian officials will hold talks today, Thursday. We'll see whether we have any more from Mr. Lavrov. I think he's briefing reporters on the ground in Moscow, and we'll, of course, have plenty more on whatever he says. Coming up, the biggest ESG topic of our time. We'll speak Russia-Ukraine with Mirova Chief Executive Philippe Zaouati about how the Russia-Ukraine conflict has changed investing. This is Bloomberg. Russian forces advance in southern Ukraine, but Moscow's invasion in the north appears to have stalled outside of Kyiv. The refugee crisis worsens. The UN estimates that more than 1 million people have fled Ukraine in the past week. The Commission President Ursula von der Leyen says the same. And Jay Powell says he's keeping an eye on the impact of the war, but the Fed chair also plows ahead on rate hikes. Oil hits its 2008 high. The Russian invasion upends the market. Brent crude closes in on the $120 barrier. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we're keeping an eye, of course, on what the foreign minister of Russia is saying. He's giving a joint interview not only to state TV in Russia, but with a few international broadcasters. And he's talking about, first, what exactly could happen between Russia and Ukraine. He mentioned that Russian-Ukrainian officials will hold talks later today. Of course, in the context of all of this is, for example, Gazprom's energy trading arm being kicked out of its central London offices. We're here based in London, so it's interesting to see how various regions or various countries are dealing with it. And this is really piling on more pressure on the company that's already been shunned by many UK trading partners and scrutinized by the government. We'll keep an eye on what Mr. Lavrov is saying, and we'll bring you the very latest from that as well. This is a picture for the markets. It's all about basic resources, and it's all about commodities. Now, we did have a bit of a reversal when it comes to some of the European stocks. The other thing I would watch out for is VIX. Now, the biggest week for commodities in close to 50 years is unfolding. This is part of our reporting. We see this global crude benchmark Brent taking aim at $125 a barrel. This is what a lot of analysts and insiders have been telling us. And we spoke to Jake Lloyd-Smith saying that, look, as long as enough buyers continue to shun Russian supplies after the invasion of Ukraine, that could possibly be within reach. And then zinc also touching 4,000, currently at 3,981. What we look at in terms of gas prices, and again, let me remind you that this is a headache for households. It's a headache for inflation, as more and more economists and analysts say that we could possibly be looking at stagflation. Unclear whether the central banks could protect us from something like that. Now, the fallout of Russia's invasion of Ukraine is gathering momentum, with Russian stocks finding themselves isolated from a large segment of the investment fund industry, including the MSCI and the FTSE Russell indices. Now, this as many global corporates join the boycott of Russia, with some executives condemning any business interaction with the country.
I would say to all my fellow chief executives and chairmen around the world and major shareholders, if you're making $1 from Russia right now, I'd call it blood money.
Now, for more on all of this, we're joined by Bloomberg's Benny Camel. So, Benny, we also try and figure out, the companies that have decided not to either ship or manufacture in Russia. We heard from Apple, Nike, Disney yesterday. What do we know about any more companies joining this boycott or exodus?
So the exodus is gaining momentum. We have more companies in the retail space in particular that have joined in here. We had big names like Burberry, like the online fashion retailer Boohoo, ASOS, H&M. All these companies are saying that they will stop supplying Russia. They will stop shipping products to Russia. For some of them, this is a bigger hit than for others. For Burberry, for instance, it's really a small part of their business. They make a lot of their money with Russians coming over here to London London to Frankfurt and so on and buying their products there. But for companies like H&M, it does have a substantial effect on their business. For some companies, it's actually very hard at this point to do business in Russia. So it's not really a question of wanting to do business, but they are simply cut off from supply chains. We heard from DHL, the courier company, earlier this week that they will stop shipping to Russia. So this really makes doing business in Russia ever more difficult, and that is adding to the exodus.
So, Benedict, one thing, of course, is for a company to announce it's leaving Russia. How difficult is this in practice to entangle yourself from still the 11th biggest economy in the world?
It's very difficult indeed, and we're seeing this across the board. We heard from companies like BP, that was one of the first ones to say we're pulling out, and they will probably take a massive financial hit on this. Other companies that have fixed assets on the ground, be it installations in Siberia for oil and gas, be it shops and employees, actually pulling out of these assets is going to be very difficult and time-consuming. It'll take a lot of time. The announcement, as I said, is one thing. But actually pulling through on this is going to take much longer. And some companies are actually saying, we're staying here. We had a very interesting interview yesterday with the CEO of Bulgari, the luxury jewelry maker, which said, we are staying here for now. We're selling to Russians. We're not really in politics. We are accustomed to being in difficult markets. So you're seeing both sides, really. Some companies saying we want to stay in and others are pulling out.
Benedict, thanks so much. Our Benedict Camel there, of course, who oversees all of our coverage on business. Now, coming up a little bit later, we'll also speak to the former president of Ukraine, Petro Poroshenko. Don't miss that interview. Joins us this afternoon at 3:30 p.m. London time. Now, Mirova, an affiliate of Natixis that specializes in sustainable investing, thinks the conflict in Ukraine is the biggest ESG topic of our time. While Philippe Zaouati, chief executive officer of the £24 billion asset manager, argues that the crisis will accelerate ESG investing trends and the EU's transition to renewables. Well, Philippe Zaouati joins us now in the studio. So, Philippe, thank you so much. First of all, we need to talk about inflation. And I know one thing that's often forgotten in ESG, because people automatically think about climate change, is, of course, the social impact. Is this a question of morality now?
I don't think it's a question of morality. I think it's a question of understanding that, we cannot, basically do responsible investments without democracy. And so it's not a question of ESG becoming more moral or being moral. It's a question of ESG becoming more political. And I think we are just in front of a situation where we cannot just hide our ESG analysis only behind our analysis of companies. We have also to have a statement about where this business is made and how this business is made. And so it's about human rights and it's about the fight to defend democracy.
But Philippe, it was perfectly acceptable actually to do business with Putin 2-3 weeks ago before we saw the shell and the bombing. So where do you draw the line? Where do how do you handle China, for example?
Was it really acceptable? That's the question. It was acceptable in the market, in the business. But when we see, for example, some funds which are labeled responsible, especially under the SFDR regulation, like Article 8 fund, where you could find some Gazprom stocks, for example, it's questionable. It's questionable. We wrote a paper about a couple of weeks ago about China, and our position was very clear. We think that ESG should not help autocratic regime to finance themselves. So that means that investing in autocratic regime government bonds or companies or government-led companies bonds is really questionable for ESG investing.
Even if it's to help with the renewable transition? It's not always so black and white, right? When you see bombs fall, I understand, but otherwise...
Of course, but it's question of... I like the DNA sage, do not significantly harm scheme of the European Union. That means that you can have something which is positive on one topic, but if this investment is making significant harm on another topic, you should not be there. You cannot just help energy transition with an autocratic regime and against democracy. If not, we won't be able to do anything in the future.
So how does that limit? Have you actually done an analysis? Like, if you say how does that limit? Like, what is off limit at the moment?
I think that clearly China is an issue. Absolutely. I mean, Russia was one. There are others. But again, the good thing I would say is that there is no complete. It's not orthogonal between the thinking about energy transition and what's happening in Ukraine. I mean, it's maybe the contrary. I hope that it will be exactly the contrary, but that the situation in Ukraine will help us to accelerate the energy transition, and we don't need to invest in Gazprom to do this, or to even in companies.
The problem,
in the Russian government
is one of timeline, right? So
Sure.
I guess how often, and one of the things that we're trying to figure out in the markets, if there was a blackout from Russia, if they were turn off the taps,
Sure.
what's the energy efficiency and transition that we could go through in Europe, and how does renewables help in that?
We are going to suffer from this, that's for sure. It will be painful, but we need to accelerate. I mean, of course, not only the construction of renewable energy, but on the top of this, what we need is really to build an energy policy at the European level. That's what we lack today. We had a lot of discussion around the taxonomy, last weeks, and I was clearly against the inclusion of nuclear and gas in taxonomy, because we were just using the taxonomy in order to fix the question of energy mix. We need really an energy mix in Europe, and it will be, of course, mainly renewable.
All right, thank you so much. Philippe Zaouati, there, the Chief Executive Officer of Mirova. We've been talking, of course, about this energy transition for quite some time and seeing exactly what we can see in the coming days. Now, Mr. Lavrov, the Foreign Minister of Russia, saying that Russian and Ukrainian officials will hold talks today. We'll have plenty more on that. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's stay on the war on Ukraine. And President Volodymyr Zelensky has appealed to the European Union to fast-track membership for his country. Despite support from several member states, Kyiv faces an arduous process that typically takes years. Now, in the last couple of minutes, we've also heard that the EU Council has now sent the request to the Commission on Ukraine membership. Now, to talk about all of this, Georgina Wright, Senior Fellow at the Institute Montaigne. Thank you so much, Georgina, for joining us. First of all, in terms of timeline, in the quickest possible scenario, how long would it take for this to happen? Years?
Hello, Francine. It really depends, to be honest. I mean, Finland took 2 years from the moment that it asked to join and the moment that it actually joined. And there are other countries like Turkey that have been in negotiations since 2014. So it's really difficult to say. I mean, there are a number of criteria that the Commission that will be reviewing Ukraine's formal application will be looking for. So, does Ukraine share European values? Is it in a place where it can actually absorb the EU's rule book? Does it have a well-functioning market economy? Does it have sound institutions? So there are a number of things that Ukraine would have to meet before actually the EU could declare it candidate country.
Georgina, would it give it some protection against military attacks? So once you're a part of the EU, this would certainly antagonize Vladimir Putin. Concretely, what does it mean?
So there is this mutual assistance clause, which is a little bit vague in the treaty, but it basically says that if there is an EU member state in need, the others must come to its defence. Now, we don't know if that means militarily, if it means politically, but I mean, beyond thinking about the mutual assistance clause, there is a question about, can a country in war realistically enter negotiations to join the EU? Because even if EU countries and the European Parliament say, do you know what, actually, yes, let's get Ukraine, let's grant it candidate status, there is a difference between granting a country candidate status and actually granting a country EU membership. So there is still a long way to go.
Georgina, where do we find out, or when do we find out actually the advancement of this? And when you look at, shared values, how difficult is this when there's a raging war going on in the country? I mean, it almost seems impossible. We've never seen anything like this before, right?
I mean, it's really tricky for sure. And I mean, there are technical reasons why this whole process is complex because, you've got to get EU countries and the European Parliament on board, and then you have to, have 35 chapter negotiations. So it means anything from sort of single market regulations to social policy. And then after that, you'll have voting as well. And if you're in the midst of a war, it's very difficult to have that bandwidth to really negotiate. But I think for Ukraine, it's an important political signal, right? Being granted candidate status. I think the Ukrainian government knows that there is a difference between being granted that status and actually becoming a member. But I think it's an important political signal, which, until 2 weeks ago seemed impossible.
How would Russia take that?
Well, that's the key question. I mean, I'm not the Russian government, I don't know, but it would be potentially seen as a provocation, certainly. I mean, Russia's been very clear. Vladimir Putin, back, I think, in 2009 at the Munich Security Council said, Ukraine should not become a member of NATO, and, and sort of inferring there that actually EU membership should sort of not go beyond those sort of borders of the Baltic states. And actually, there is a question about Georgia, Ukraine, because, Ukraine has submitted its formal application, but so has Georgia. And I mean, there is a question there about Russia trying, what is Russia's end game here? Is it trying to simply topple the Ukrainian government? Is it trying to annex Ukraine? Is it trying to create a sphere of influence? And if that's the case, then certainly Georgia and Ukraine on the road to membership will be seen as a provocation.
Georgina, you could see, a case in point where actually they start the process, but then if there's someone put in place in Ukraine by the Russian government, they just pull it and that's the end of it.
So, I mean, it's all hypothetical at this stage, but certainly the EU, as I said, granting Ukraine candidate status is not the same as granting Ukraine membership. And there would be negotiations, and depending on what goes on, certainly the EU can just say, actually, let's pause this, let's stop this. I mean, there's no guarantee that if you are a candidate country that you will become a member. I mean, just take Turkey. Turkey has been in negotiations since 2004. I mean, they have been halted since 2018, but, there is no guarantee that Turkey will join anytime soon. And there is a concern on the EU side as well about saying, should we get our own house in order first? Should we resolve our internal tensions before we actually enlarge further?
Georgina, thank you so much for joining us. Georgina Wright there, Senior Fellow at the Institut Montaigne. Now, coming up, we speak to the Deputy Governor of the National Bank of Ukraine after its rate decision. Don't miss that conversation just after 1 p.m. London time. This is Bloomberg. Now let's get to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Federal Reserve Chair Jerome Powell is making the fight against inflation his top priority over risks from Russia's invasion of Ukraine. In his testimony to lawmakers, Powell backed a 25 basis point hike later this month, adding that a bigger or more persistent rate hike path would be warranted if U.S. inflation stays hot.
I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. And to the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis point at a meeting or meetings.
Now, Russia's credit rating has been cut to junk by both Moody's and Fitch Ratings as risks mount that sanctions could undermine its capability and willingness to service debt. Moody's downgraded Russia's long-term foreign debt rating from Baa3 to B3. Fitch also slashed Russia's 6 levels and placed its rating on negative watch, citing weakening public finances, slowing growth and elevated geopolitical risk. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. A look at commodities scorching rally. Zinc actually topping at some point $4,000. This is because, of course, of the Russia increasing economic isolation story. Now, commodity markets, metals, oil, gas, wheat, a lot of the agriculture, of course, upended by this Ukraine crisis as big corporates also withdraw from Russia, lenders pulling back from financing deals, and the threat of new sanctions deter buyers. If you look at gas futures, they're gaining some 2.5%, zinc 3% higher. Coming up for sale, billionaire Roman Abramovich puts Chelsea Football Club on the market. We look into the how sanctions are targeting Russia's wealthiest business people. More on our big take next. Roman Abramovich is selling Chelsea Football Club after almost 2 decades of ownership. Now, the Russian billionaire is seeking £3 billion from the sale of the football club. He says net proceeds will go to a foundation for Ukraine war victims. The billionaire has not been personally sanctioned by the UK government. Now, for more on our big take today, looking at how the sanctions are impacting oligarchs. So Bloomberg senior writer Stephanie Baker joins us. Stephanie, has the West actually gone far enough with sanctions?
Well, I think you have to take each in turn. I think the EU has been the most aggressive in terms of sanctioning Russia and its wealthiest businessmen. On Monday, they sanctioned a handful of Russian oligarchs that have assets in the West and will very much feel those penalties. The UK has been noticeably slower in terms of sanctioning the oligarchs. They have talked a tough game, but haven't followed through. And I think there's now concern that just the threat of sanctions is allowing many of those Russian billionaires to get their assets out of the West and move and to escape the penalties before they come down. Of course, the US, UK, and the EU have coordinated these broader sanctions targeting banks and the payment systems that is hurting, across the board. But no, I think the sanctions can go further and will go further.
Yeah, and just minutes ago, the French customs officials have said they have seized a Russian-owned yacht. What is the end game of these sanctions, Stephanie? Is it to stop Putin and stop the war, or is it to penalize him longer term?
Well, because NATO does not want to get engaged in a direct conflict with another nuclear power, they're using sanctions as the main weapon to fight and support Ukraine in its war with Russia. And the idea is to starve Putin of the funds he needs to wage war. Now, of course, without an embargo or a block on Russian oil and gas, he will still be able to finance this war, but the blocking of central access to central bank reserves, for instance, will have a huge effect. And the idea is by targeting Russian banks as well as wealthy oligarchs, that will in turn put pressure on Putin and raise the cost of waging this war.
Stephanie, thank you so much. Stephanie Baker, there was some great reporting. You can, of course, read The Big Take in full on NI Big Take Go, and it'll be also part of Bloomberg Business Week. Now, this is a check on commodities. We've had a lot of volatility, actually, when it comes to markets since the beginning of the trading session. Now, if you look at commodities and what they've been looking at, some of the front-month dated contracts for delivery of various commodities will see prices extend gains. This is according to a couple of analysts that we've been speaking to as buyers look set to get their hands on materials now at any cost. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Kailey Leinz in New York, or Anna Edwards here in London. This is Bloomberg.
There is a 700-pound gorilla in the room.
There are regions of the world which are in defense mode.
We are really thinking about risk management right now.
With $110 oil, it is that much more difficult.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, March 3rd. Our top stories today. The war enters its second week. Russian forces are firing rockets at Kyiv and stepping up their campaign in southern Ukraine. More than 1 million people have fled the country. Bloomberg is live at the border of Ukraine and Poland. More investors see the Russian market as uninvestable. MSCI and FTSE Russell cut Russian stocks from widely tracked indexes as Moody's and Fitch Ratings downgrade the country's credit rating. And it's the biggest week for commodities since 1960. Everything from wheat to aluminum is soaring. Oil's selling at its highest price since 2008. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. The pace of change, the pace of move higher in the commodities moves, Kailey, really quite eye-watering in the early hours of the European trading day, something that certainly knocked the confidence of global stocks once again.
Yeah, you definitely are seeing big moves in commodities. You're also seeing a lot of volatility in the bond market as the market tries to assess what exactly central banks are going to be doing in light of this crisis. Of course, we heard from Chairman Jerome Powell of the Fed yesterday saying he does expect liftoff this month, but he is advocating for a 25 basis point hike. So as for where that left us in Asia overnight, there wasn't that much movement when it comes to equities. They were mostly higher. China one exception, but the MSCI Asia Pacific Index as a whole was up a little more than 0.5%. Japan was a bit of an outperformer. That may in part have something to do with the weakness we are seeing for the Japanese yen. It is weaker against the dollar by around 0.2%. 115.77 is where we trade. Not a lot of bid for that haven asset. Not a lot of bid for the safety in bonds either. Again, this comes back to the monetary policy equation. You are seeing selling pressure really across the world, and that includes at the belly of the curve in Australia. That's where you saw the biggest move with that 5-year yield moving up about 9 basis points overnight. Finally, of course, the moves in the commodity complex are not limited to oil. It's touching the metals, it's touching the ags. I wanted to point to iron ore, up for what is now going to be a fourth day in Singapore, higher by 6 percentage points today. We are very, very close to $160 a ton once again. Matt, a lot of concern there about demand and, of course, supply and a tighter market.
Yeah, I really think commodities are front and center again today. It's the third day in a row where commodities are kind of at the center of the story. Take a look at futures here. Not a lot of action. We're down, but after a big up day yesterday, the S&P closed 1.8% higher, even though we had a rally in oil again yesterday. The dollar index is getting a bid today, 1187 for the Bloomberg dollar index, 1188. So that's one place where you could say it looks risk off. On the other hand, Kailey, as you mentioned, there was no bid really for treasuries. I didn't even put them in the chart here. Crude up another 2.6%, and this is West Texas Intermediate at $113.50 a barrel. Brent is over 116 right now. And Bitcoin, another risk-off indicator in a sense, down 2% right now at 43,218. The narrative that, Russian oligarchs or just the wealthy in general would pile into digital currencies doesn't really seem to have played out, unless that's just given everybody else a chance to sell, Anna.
Yeah, something to talk about when it comes to Bitcoin, certainly. Let's have a look at the European map then, Matt and Kailey. And it looks like kind of mixed overall, but certainly when you come to the western side, you see that we are caught in something of a downward move today, down 0.3% on the FTSE 100. Fairly flat, actually, on the French market, a little bit heavier, the losses coming through in Germany, losing our footing perhaps a little bit because of the speed of those commodity price moves, which really were quite stunning coming out of the Asian session and into the European session. This is a sector that benefits, though, of course, up by more than 3% on basic resource stocks. The likes of Glencore, ArcelorMittal, Antofagasta, all up really strongly in the London session, as is the Brent price. But 116, the handle you rightly pointed to there, Matt, we were nearly at 120 just a few hours ago here in London. So certainly we've seen a great deal of pressure to the upside on Brent crude, a lot of self-sanction taking place when it comes to those Russian commodities. Polymetal, this is a gold producer based in St. Petersburg. It has a direct listing on the London market, so not one of the 28 GDRs that the LSE has said will not be trading in London anymore. This still trades. This still is a feature. We'll see where the politics of that goes. But it is being dropped by the FTSE 100, down another 30% today. It was already down 80% or so in terms of the position coming up to today. This is the ITV share price. This is a broadcaster, domestic broadcaster in the UK, but it's a bit of a global story because they're trying to keep up in terms of investing in streaming, keeping up with the likes of Netflix, the cost of that, giving analysts something to think about, and that stock down by 14.5%, Kailey.
All right, Anna. Well, speaking of global stories, we're going to get a global picture on macroeconomics throughout the day today. We're going to get minutes from the ECB's latest meeting at 7:30 a.m. New York time. Then when it comes to U.S. monetary policy, Fed Chair Jerome Powell will be testifying again on Capitol Hill, this time before the Senate Banking Committee. That will begin at 10 a.m. New York time. And finally, on the economic data front here in the U.S., initial jobless claims and durable goods today, all teeing us up for Jobs Day tomorrow, Matt.
All right, so we'll focus on those things for sure, but of course the war remains front and center. Fighting intensified in Ukraine overnight. An increasing number of people are fleeing the country for its western neighbors. More than 1 million have fled Ukraine since the invasion began last week. French President Emmanuel Macron has acknowledged that even tougher days are ahead.
Hundreds of Ukrainian civilians have already been killed. Women and children were killed again today. The coming days will most probably be increasingly tougher.
Let's get to our reporters around the globe. From the Polish-Ukrainian border, we're joined by Bloomberg's Aggie Cantrill. From outside of European Parliament in Brussels, we're joined by our European correspondent, Maria Tadeo. In Washington, D.C., Bloomberg government reporter Jack Fitzpatrick. Let's start, though, Aggie, with you at the border. What's the situation look like on the ground this morning?
Hi, Matt. This morning we've seen a steady flow of refugees arrive from Ukraine. This has been the case for the last several days now. And as you said, there is concern that the flow of refugees is going to intensify as the fighting intensifies. Now that we're seeing places like Kiev and Kharkiv being hit, we're also hearing from the WHO that there's an urgent need for humanitarian corridors within Ukraine in order to get medical supplies and aid workers to those desperately needing areas. It's also clear here that there's also a lot of need on the Polish side to bring humanitarian aid over to Ukraine.
Aggie, thank you. Aggie Cantrill there at the border. Let's get to Maria Tadeo for the political side of this. She joins us from outside the European Parliament in Brussels. Maria, there is speculation of more talks today. We've certainly heard that a couple of times from the Russians. What are the Ukrainians saying?
Well, Anna, the Ukrainians say, to cut a very long story short, that these talks will be pointless if Russia continues to put on the table what they believe is a request for total capitulation, meaning a new government to ditch that bid for NATO and EU membership, and of course to give up weapons, Ukrainian weapons, to Russia and demilitarize the country. The Ukrainians say this would be unacceptable, and the one thing they want to talk about, or the only thing they want to talk about, is a ceasefire for that very humanitarian reason Aggie just reported on the border with Poland, but also a way out that would include Russian troops moving away from Ukraine, which is now problematic, as you know, because they're knee-deep into the country. The other thing that I wanted to point, Anna, and it shows you just how real-life sanctions are beginning to apply. The French government says that it has requested and will seize the mega yacht of the Rosneft's CEO that is now parked in a port in France. And the French continue to say this is just the first of many other operations. We're going to go after assets of all Russian oligarchs again as a result of the sanctions that could, I hear, even potentially increase in the next few days.
All right, Bloomberg's Maria Tadeo in Brussels. And of course, Bloomberg's Big Take story today focuses on those oligarchs. We'll have more on that later in this program. But first, let's get over to Washington. President Biden is trying to pressure Vladimir Putin over the invasion of Ukraine by sanctioning Russian banks and those oligarchs. We heard from Ron Klain, White House Chief of Staff. He spoke yesterday on how he sees the war in Ukraine developing.
It hasn't been decided yet what would happen if the Russians withdrew. We see no signs, unfortunately, that the Russians have any intention of withdrawing right now. And indeed, their military operations in Ukraine continue to escalate.
So let's get to Jack Fitzpatrick, Bloomberg government reporter who's joining us from D.C. Jack, there's some concern now that the Biden administration is not giving Vladimir Putin an exit here with the imposition of these sanctions. How are they thinking about, or have they vocalized what they would like to see from Putin to start seeing some of these things relax?
Well, there's been no detailed plan that shows us what the best case scenario end to this is, and that is cause for concern. It's interesting that at the same time that some outside experts are raising the issue, that there doesn't appear to be a very convenient out for Vladimir Putin. On Capitol Hill, the tenor really is focused on continuing to ratchet up the sanctions and applying more and more pressure to him. Over the last 24 hours or so, we've heard from more lawmakers, the pivotal one, of course, being Senator Joe Manchin, saying there should be more energy-focused sanctions, cutting off U.S. purchases of Russian oil and gas. It was a bit surprising. After hearing a bunch of Republicans talk about that, we even heard the progressive Senator Ed Markey express support for that. So there's actually a bit of a counter push on Capitol Hill to continue increasing the pressure, despite the fact that there are some concerns that there's not a clear path for Putin to, with some level of dignity, pull out of this and take the loss. So it's a very high pressure situation, and I think at this point it's a matter of continuing to ratchet up that pressure.
Jack, the budget is coming due on March 11th, right? The government's funded until then, and typically we see last-minute, work that pushes that forward or gives us a new budget. How does the war situation change the typical Washington mechanism?
It complicates it a bit. It may actually push it along. They're discussing attaching a couple key emergency issues to the broader government funding measure that's due by the end of the night next Friday. One would be a Ukraine spending supplemental. The number on that continues to rise as we look at the humanitarian costs. The last I've heard from the House Appropriations Chair, Rosa DeLauro, was it could be looking something around $10 billion. That could actually motivate lawmakers to get moving on everything else they need to do. It has raised some questions about whether they take that money out of other programs. Mitch McConnell said they had gotten tripped up on that question a bit, but the goal is still to do government funding, Ukraine spending, and probably also a supplemental focused on the Omicron variant, all by the end of next week, which is a very fast pace and is going to be difficult, but that's what all lawmakers on both sides of the aisle are saying is the goal.
Jack, thanks very much. Jack Fitzpatrick of Bloomberg Government. Now, MSCI and FTSE Russell are cutting Russian equities from widely tracked indexes, isolating the stocks from a large segment of the investment fund industry. Let's get more with Bloomberg's Danny Berger. This is fast moving, isn't it, Danny? There's a lot of changes coming thick and fast at the markets. Take us through the latest here.
Right. Well, these are two of the biggest index providers in the world. So there are billions of dollars that are going to have to be divested from passive funds. Let's work through these numbers to get a better understanding of exactly what this is going to look like. So according to Bloomberg Intelligence, funds in the U.S. and Europe hold about $13 billion worth of sanctioned stocks from Russia. So that's just the sanctions one. So add a bit more on that for all of Russia. Now, of those funds, it is passive funds that hold the largest chunk of that. Vanguard, for example, holds more than $2 billion. BlackRock, $1.5 billion. And who do these funds track? Well, for Vanguard, it's FTSE Russell. And for BlackRock, it's mostly MSCI. So now these companies are going to have to offload these stocks from their funds. How do they even do that, though, in this scenario? FTSE Russell, for their part, has said that they're going to take these Russian stocks that are suspended in the indexes and value them at a big old fat goose egg, 0. So likely that means if you're an ETF provider, because you can't sell these securities, you just mark them down to 0, you move them aside to a different pile. So now a lot of these funds are just going to be holding worthless stocks that are illiquid, and they're not going to be able to offload.
All right, so people really can't sell some of these assets at this point, Danny. Yeah. Also, people, whether sanctions are in place or not, are acting as if they cannot buy Russian commodities, oil and gas. That is leading a lot of people to bid up commodities. Can you just put the moves we are seeing into context?
All right, well, superlatives abound. You have crude at its highest since 2013. For Brent, you have WTI that its highest since 2011, touching a 2008 high. Again, it's as you say, people just aren't willing to touch crude coming from Russia. They're not willing to trade it. The ships aren't willing to get it as well and transport it. Now, it's not just crude, it's also European gas, which has taken off. It's commodities, which very similarly people don't want to touch for Russia. All of that means that the moves that we've seen up to Wednesday was an 8.6% rise in the Bloomberg Commodity Spot Index. That's already the best week since 1974. And given today's moves, we're likely going to add to that, and it's going to be, at least at the moment we stand, the biggest gain in the price of the Bloomberg Commodity Index on record, Kailey.
All right, superlatives galore indeed. Thank you so much to Bloomberg's Danny Berger. Now, that move we're seeing in commodities is reflecting back into some of the stock action we are seeing in pre-market trading here in the U.S., and that some energy stocks are outperforming. The likes of Marathon Oil, Devon Energy, they're each higher by a little more than 1.5% this morning. There's a few other movers to the downside, though, more idiosyncratic stories. One is Ralph Lauren. It announced yesterday its chief commercial commercial officer, was resigning after a misconduct investigation. It didn't really hit the stock yesterday, but that is getting sold dramatically this morning, down the better part of 10%. But it's an even bigger move to the downside for Snowflake. This is that cloud software provider. It gave a disappointing revenue outlook, thinks sales growth is going to slow from the triple-digit percentage gains that it once enjoyed. And that stock is really getting hit hard this morning, down more than 21% before the bell, Anna.
Kailey, let me just get to some breaking news very briefly. Intesa says its presence in Russia is under strategic review. So we continue to watch various companies around Europe and what they are doing in Russia, and this in the banking sector, crucial to get a better understanding of exposures and future plans. It's also crucial in the auto space, where we're seeing a lot of movement, a lot of companies talking about either keeping or moving out of their links with the Russian market. Coming up, we'll get the views of Carlos Ghosn, the former Renault-Nissan CEO. He will talk to us from Beirut. He'll weigh in on the latest in the auto sector and, of course, the devastation in Ukraine. And former Ukraine President Petro Poroshenko, that conversation at 10 a.m. in New York, 3 p.m. in London. Plus, the end of an era for oligarchs, how sanctions are punishing Russia's wealthiest businessmen. More next from our Big Take. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York, Anna Edwards with us in London. I'm looking at financial conditions right now and how they've been affected by the Russian war in Ukraine. For those of you watching on television, this is the FCON. You can see it finally going negative here in red with the Fed expected Fed changes in white. For those of you listening on radio, I will just say this. I know you're driving to work. When you get there, pull up on your Bloomberg terminal, FCON Go, to look at the financial conditions, and you will note that we've been so loose for so long, it should be a shock to the economy that we get this tight. Ven Ram joins us, Bloomberg cross-asset strategist out of London. Ven, what do you see in terms of the effects of tightening financial conditions on the Fed, on the ECB, on the dollar, on the euro? This has such broad implications.
Morning, Matt. Absolutely. I think that, we've got these financial conditions that I think it's a product of what the Fed and the ECB have been doing for so long. I think we have stayed too loose to where we needed to be. And this is a catch-up that we need to do. And inflation in the US, as you know, is running north of 7%, the highest in decades, in 4 decades. And we have a situation where the Fed funds rate is effectively at zero. So, I mean, this is an economy that has proven itself to be so resilient, even through the pandemic. And after that, and this year, we are expected to see a growth of 4%, give or take, a couple of hundred basis points for the Russia shock. Even so, that's well above trend growth. And what have we got? We've got rates at zero bound. And I think that's simply not an excuse for the markets and for the Fed. I think that the message is clear that they need to go tighten, and they need to do it as of yesterday, and they're way behind the curve.
As of yesterday, even some Fed officials pointing out the distance between where they should be and where they are. Ven Ram, thank you very much. Bloomberg Markets Live. Remember, you can get more market analysis. Check out MLIV Go on your terminal. This is Bloomberg.
Now keeping you up to date with news from around the world, here's the first word. China's leader Xi Jinping is engulfed in crisis just when he wanted stability the most. Xi is laying the groundwork for a likely third term as president. Meanwhile, the Chinese economy is growing the least in 3 decades, the housing market is slumping, and the invasion of Ukraine is forcing China to reassess its support for Vladimir Putin. China's annual legislative meetings begin on Saturday, and lawmakers may push Xi for change. And in Japan, former Nissan director Greg Kelly was found guilty of helping Carlos Ghosn underreport his compensation. A court in Tokyo gave the American executive a 6-month suspended sentence. Ghosn and Kelly were arrested on the same day in November of 2018, but Ghosn made a spectacular escape from Japan in a private jet. And we are about to talk to the man himself, Anna.
Yeah, absolutely. We will talk to Carlos Ghosn, former Renault-Nissan CEO. We'll get his reaction to the verdict on Kelly, but we'll also talk about the issues that the global auto industry is now facing. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The war in Ukraine has now entered its second week. Russian forces are pressing ahead with their offensive. They fired missiles at the capital city, Kyiv, and they stepped up their campaign to take cities in the coastal south. More and more, the Russian market is being seen as uninvestable. MSCI and FTSE Russell are cutting Russian stocks from widely tracked indexes as Moody's and Fitch downgrade the country's credit rating. Commodities are on track for their biggest weekly gain since at least 1960. Oil selling for the most in 14 years. So is wheat, and aluminum has set an all-time high. Importers and shippers are staying away from Russian exports in the wake of the invasion of Ukraine. I'm Anna Edwards in London. Matt Miller and Kailey Leinz with me, of course, in New York. And Matt, clearly the big ramp up that we've seen in commodity markets is dialed back from just how frantic and frenetic it was in the early hours of the European trading day, but still a substantial rally in commodities.
Yeah, I mean, it continues after the amazing moves that we've seen over the last couple of trading sessions. And markets may not be responding terribly well. Although, you know what? We had a great up day yesterday, even as crude continued to gain. S&P futures right now down about 0.25%. So the mood is a little bit more risk off. Investors are buying the U.S. dollar index today. So the Bloomberg dollar index up to 1187. But crude continues to gain. I mean, yeah, we're not looking at 5, 6, 10% gains, still up another 260 today to 113.30, and this is for NYMEX. Brent's at 116, so it's pretty impressive. Bitcoin, on the other hand, down right now 2%, and this, you know, to some extent, I think this puts an end to the idea that people with loads of rubles and nowhere else to go were piling in to the digital currency, because that would have moved the needle, and we didn't really see it go that high. So 43,211 is where we stand on the main digital currency. Kailey, what do you see in terms of pre-market movers?
Well, a lot of what I'm seeing in terms of the individual stock action is actually related to the broader macro moves and what we're seeing with the gains across the commodities complex. That's true for stocks tied to oil. Some of the energy players out there, including Occidental Petroleum, it's higher by about 1.3%. You have some of the big majors like Chevron and Exxon higher too, though as oil is off of session highs, they are also off their pre-market highs. Exxon is up just about a third of 1% or so. You also, of course, aren't just seeing gains in oil. You're seeing it in the ags. You are seeing it across the base metals complex, and that is translating into some of those materials-oriented stocks, the likes of Freeport-McMoRan, which is higher by 1.6%, and you also have U.S. Steel up by about 0.75% before the bell, Anna.
Yeah, and picking up on what you've been saying there about some of the stocks that maybe benefit from the higher oil price, we certainly see that here in London. But the broader story is a weaker one. So, Kailey, the stocks here in Europe down by around 0.6% on the stock 600. The basic resources sector, though, is up by 3%, as you can see. So that's really out of kilter with what we're seeing elsewhere. And that is because, that is, of course, because this sector set to benefit from higher commodity prices. We see the likes of Glencore, ArcelorMittal, Anglo-American all moving to the upside. Brent crude, $115 a barrel, up by another 2%. It seems OPEC Plus not in any hurry to bring more barrels to the market in response to the higher energy prices, the self-sanctioning against Russian commodities that's going on. Natural gas prices jumping to another high. This week, we've taken out those highs of December last year. And so that's where we are on the natural gas story as a whole, even though the most recent move appears to be to the downside. Polymetal, this is an interesting gold mining company based in St. Petersburg, direct listing on the London market. So it looks as if it keeps that for now. The stock is down by 31% in today's trading session as a number of the GDRs listed in London, the depository receipts, are taken off that market. And we see Polymetal excluded from the FTSE 100, Kailey.
All right, so you're seeing the exclusions there. You've also seen this week a growing number of global companies choosing to cut back ties with Russia or cut them entirely after its invasion of Ukraine. Let's get an update from Bloomberg's Danny Berger. And I've said it before, I'll say it again, the list just continues to get longer.
It does, and it's multiple industries, it's oil, it's airlines, it's tech. But really where the list has been very consistent and nearly every day hearing about someone new is autos. Yesterday, it was Mercedes-Benz. You're welcome, Matt. I'm not calling it Daimler. Mercedes-Benz saying that they wouldn't export to Russia. So Mercedes joins a long list of companies in the auto space who are no longer doing business in Russia. It's GM, it's Ford, it's Harley-Davidson, it's Daimler Truck. And beyond just doing business in Russia, there's also a logistical issue, which a lot of these car makers are now facing because there are car part factories in Ukraine. So already these car makers were dealing with a chip shortage. But for example, we've heard from VW and BMW who have said that they're likely to stop production, idle it, or be forced to shut down because, again, the shortages, which won't allow them to put out car parts. Now, beyond that, one of the most exposed autos to Russia is Renault. And Russia is the second biggest market for Renault, thanks to its partnership with an automaker there. And because of that, there's been a very severe sell-off since the war began. So at the moment, Renault now trading at its lowest since November 2020, Matt.
Yeah, we've seen it drop by a third over the last couple of weeks. Danny Berger, thanks very much for the roundup. Joining us now is Carlos Ghosn, the former CEO of Renault-Nissan. Renault made its big move into Russia under Ghosn's leadership. He joins us now from Beirut, Lebanon, where he's in exile after dramatically leaving Japan while awaiting trial on financial misconduct. Mr. Ghosn, a lot of talk about with you, including the suspended sentence of former Nissan director Greg Kelly, which we will get to in a moment. But first, due to the war, we're seeing so many supply chain issues. And I just wonder what your thought is on how Renault survives this. Such a big presence in Russia, such big exposure with AvtoVAZ. Can they even get through it?
Look, I think, frankly, the question should be addressed to the leaders of the company and not to the ex-leaders of the company. What I can tell you is when we decided to move into Russia and make this alliance with AvtoVAZ, everything was fine. We were here on a mission to modernize the car industry in Russia for the benefit of the Russian users, but also for the benefit of AvtoVAZ itself and Renault itself. It made a lot of sense. We worked hard. We modernized the company, and everything was going well. This present situation has nothing to do with an industrial strategy. This is more a political situation on which the present leaders of the company should make statements. And I'm very surprised they're just not saying anything, even though, as you said, the share collapsed by practically 1/3 in a couple of weeks. But they are used to that because the share collapsed by more than 1/3 in the previous 3 years due to the bad result of the company. And frankly, we did not have any serious explanation about that. So I'm not surprised about this just neutrality in front of a situation which requires the leaders of the company to stand up, to make a position, to reassure the market and to reassure their own employees.
Let me ask you this then, just in terms of the supply chain, because, Carlos, we've gotten a number of different outlooks from different manufacturers, but we're seeing now so many companies halt production. How important is Russia? How important is Ukraine to the global automotive supply chain?
Frankly, I think they are important, but they are not so important. I don't think that you're going to cripple the supply chain of the car industry because of what's going on between Russia and Ukraine. There are going to be hurdles, there are going to be challenges, but I don't think any car manufacturer has massive supply coming out of these two countries. This doesn't mean that there will be no problem, but management is here to solve that.
Good morning to you, Carlos. You left, of course, a business that was in an alliance, Renault, Nissan, Mitsubishi, which you're very familiar with. Do you think that what we're seeing now, the difficulties in Russia for many automakers, do you think that that will change the shape of the alliance at all?
Oh, well, I think this particular fact between Russia and Ukraine is not going to change the face of the alliance. The alliance, in my opinion, took a huge hit in 2018. Frankly, I think it's a zombie today. They're not working together. They're just maintaining an appearance of the alliance. There is no vision, common vision between the companies. There is not this ardent desire to work together and to benefit from this corporation. In my opinion, it's doomed because the only reasons for which you have an alliance between different companies is this willingness to work together, to make hard decisions together. And we have not seen any of this for the last 3 to 4 years.
Well, speaking of decisions the alliance may be forced to make, we're hearing now from Volkswagen it will be stopping production in Russia and halting all exports to Russia. That is according to its CEO. The headline's just crossing the terminal. So, Carlos, if you were still in charge, what would you be doing in Russia? Do you think Renault should be making a similar move?
Again, I'm not in charge, but I can tell you that if I was facing a crisis like this, the first thing is I would make a diagnosis, an exact diagnosis of the supply chain, and I will take not only immediate decision, but I would be communicating about these decisions, not only to reassure people, the stakeholders, the shareholders from one side, the employees from the other side, even the partners in Russia. So in a certain way, they have nothing to do with what's going on, which mainly it's a political issue. And I'm stunned by the fact that it's complete silence. There is nothing dictated by the company. What I can tell you is I would have been on the front line. I would have devised the plan in function of the present situation of the company that I don't know anymore because as you know, left for now more than 3 years. But I would be trying to put a plan, reassure people, and tell them how we're going to be working from now on.
Getting on to other matters, Carlos, and of course, we've seen the court verdict in Japan today, finding the former director of Nissan, Greg Kelly, guilty of helping you to underreport compensation. I know that you've said he's innocent and you've contested the charges against yourself, but then you escaped from Japan. He's not escaped from Japan, and he had to go to court. How does it make you feel to see that he had to stand in court and you won't have to?
Look, I am first relieved for Greg and his family, because finally he's going to be able to leave Japan and to reunite with his family in Tennessee. So he has had 3 years and 4 months of an ordeal that is about to end. I hope he will be able to cope with the tremendous damage, psychological damage, emotional damage, financial damage that he has been through, which is fabricated by the hostage justice system of Japan, triggered and manipulated by Nissan. Now, I just want to give you one case. Look at the case of Greg Kelly in the United States and the one in Japan. In the United States, the SEC made an investigation and ended up making a settlement with him. It took 3 months, and he had to pay a $100,000 fine, okay, for the same charges. In Japan, it took them 3 years and 4 months, where he maintained hostage in Tokyo. He was arrested, even though he had an acute medical condition, and he was put 1 month in solitary confinement. There is a total unbalance between what could happen into a developed country and an acceptable justice system and the hostage justice system in Japan. Now, he is obviously innocent. If he was guilty, I don't know why the Japanese executives who worked with him, who colluded with him, are not there. There's no mention.
I mean, Carlos, we know that they almost always convict. So there was really no question on that front. What does this mean for you? What does this mean for your future? Will you stay in Beirut forever?
I don't think so. I hope not so. I think this is a safe face verdict. It's a safe face. It was predictable. It was obvious within their system. What does it mean for me? Obviously, my fight continues. I'm trying to fight my rights in Japan, even though, frankly, I'm not very optimistic about having any fair treatment into the Japanese court. I'm not talking about the criminal case. I'm talking about the civil lawsuit. But I think what's extremely important is to see that Nissan has pleaded guilty from the beginning, knowing that the maximum they would get is 200 million yen, which is $2 million of fine. $2 million of fine. That means it's laughable. That means the big risk of the company is to say, okay, I'm going to charge the ex-leader of the company. My risk is $2 million, while from the other side, my real result, and which is the victory for them, is I'm going to eliminate any idea of merger at the level of the alliance, and I'm going to eliminate any possibility of further convergence between Nissan, Renault, and Mitsubishi. This is the real deal for which they have done all of this.
Carlos, thank you very much. Thanks for joining us today. Carlos Ghosn, the former CEO of Renault-Nissan, speaking to us there from Beirut in Lebanon. Now, coming up on the program, we'll get back to the macroeconomics. Sarah Hewin, Chief Economist for Americas and Europe at Standard Chartered. Of course, yesterday we heard a lot from Jerome Powell, and that's what sent stocks higher in yesterday's session and through into the Asian session. How much do we still rely on the testimony of Powell to take us through the rest of this week, given what we're seeing in commodities? Sarah weighs in next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Goldman Sachs Chief U.S. Equity Strategist David Kostin. That's at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
Given the current situation, we need to move carefully. The near-term effects on the U.S. economy of the invasion of Ukraine remain highly uncertain. We will need to be nimble in responding to incoming data and the evolving outlook. I do think it will be appropriate to raise our target range for the federal funds rate at the March meeting in a couple of weeks, and I'm inclined to propose and support a 25 basis point rate hike. To the extent inflation comes in higher or is more persistently high than that, then we would be prepared to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meetings. We will use our tools to add to financial stability, not to create uncertainty.
Fed Chair Powell testifying before a House panel yesterday, making it clear that the fight against inflation is his top priority, even over the risks from Russia's invasion of Ukraine. Now, of course, Powell will be heading to the Senate today. Michael McKee, Bloomberg International Economics and Policy Correspondent, is joining us now for more. So, Mike, do we expect to hear more of the same from the chairman?
More of the same, I think. He's pretty much told Wall Street what it expected to hear, and I'm not sure there's a lot he wants to add to what he said. He did say 25 basis points, which was a little bit surprising that he came out and preempted the committee meeting because people know what Jay Powell wants, Jay Powell's going to get. But there was a little politics, surprising for Washington, I know, in this comment about 50 basis points, because he's telling the hawks, I'm going to listen to you. We will consider the idea of moving faster. So you, Jim Bullard, you, Chris Waller, you're not totally out of this, but I don't think we should start there. Obviously, they're still sticking to their prediction that we're going to see inflation fall this year, fall back maybe not as far as they had anticipated. We'll get some new forecasts when they meet in March, but also that Russia's war brings a lot of uncertainty, and there isn't a whole lot the Fed can do about that. At this point, they have to wait and see what happens. So where are the markets as we go forward into the second day of this? Well, surprisingly, we gained a little. We're not a full percentage point, but you look at where we are right now, and then for those of you who are on radio, as Matt tells you, go pull this up on your terminal. But the white line is where we think we'll be as far as Fed funds futures in July. About 3 moves and about 6 moves total. That's the end of the year in yellow there. So the markets had sold off more. Now they think the Fed is going to be coming back, and that may be less to do with Powell than the war and oil prices. But we'll see when we get to March 16th where they end up.
Michael, thank you very much. Bloomberg's Mike McKee with an update there on what we heard from Jerome Powell. Sarah Hewin, Standard Chartered Chief Economist for Americas and Europe, joins us now. Sarah, good morning to you. A lot of people digging out the history books right now, trying to work out where things head geopolitically, where things go from a market perspective and economically. And I wonder if there are periods in history that you're also reaching back to. Some people talk about the Cuban Missile Crisis in 1962, others about the 1970s. And with oil prices on a tear, it's easy to see why. Are there parallels with history? Do we rhyme with history right now, Sarah, do you think?
Well, it is certainly worth looking at historical precedents, and I think that we're seeing the impact of those comparisons in the markets today. On oil prices, obviously, we know that recessions have often come in the wake of a surge in oil prices. And even in real terms, the current rise that we've seen now puts us into that sort of territory. On the geopolitical front, Just the mere talk about escalating to nuclear, even though it seems unthinkable, is clearly going to be damaging to confidence and sentiment. Obviously, the hope is that talks will eventually result in some sort of stabilization of the situation, but I don't know that hopes are particularly high for the next round of talks. And unfortunately, at the moment, it looks as if the crisis is going to be escalating rather than settling down.
In terms of the commodities run that we've seen, Sarah, how much further do you think it can run?
Again, it's very much hostage to headlines. I think there's clear disappointment on the reserve release yesterday, too little, too late. And now we're seeing more talk from Europe about potentially cutting off from Russian supplies altogether. So we're seeing a sort of big gap between the cost of Russian oil and oil more generally. Now, if the sanctions are brought to bear fully on Russian energy and Europe is looking elsewhere for energy, then costs are going to be incredibly high.
Yeah.
But let's see what happens.
Well, Sarah, on that point, we are just getting some headlines from Kadri Simpson, the EU Commissioner for Energy. She's saying that the EU is prepared for potential Russian oil supply shocks, and it's much better prepared for a gas crisis than a decade ago. So that's the story in Europe. And Sarah, I'm wondering, in your view, whether or not this crisis is going to create a larger divide between Europe and the ECB and the U.S. and the Federal Reserve.
I think it certainly is. I think if we go back just a couple of weeks, we were seeing the ECB pivoting to a more hawkish stance, indicating that QE tapering would be accelerated, that interest rates would be rising by the end of this year. Now, what we've seen subsequently looks to be a backpedaling on that. At the same time, Fed seems to be doubling down on rate hikes for later this month. So there does seem to be a clear divergence, and understandable. The impact on euro area growth, European growth more broadly from the current crisis is going to be much more damaging than for the US, particularly given Europe's exposure to Russian energy provision.
Sarah, thank you so much. Sarah Hewin of Standard Chartered, thanks for joining us. Now, sanctions are punishing Russia's wealthiest business people and the country's leader by bringing a cold, hard stop to 30 years of integration with the global economy. For more on our big take story, Bloomberg senior writer Stephanie Baker joins us now. Stephanie, fascinating read, fascinating to see the extent of the sanction being placed on the richest Russians right now, on oligarchs. Who's leading on this? I mean, many Western countries, many Western European and the US and some Asian countries in this too.
Yeah, the big surprise is that the European Union has really taken the lead at targeting the wealthiest Russians, having a much more aggressive approach than the UK, for instance, which is surprising because the UK has been such a magnet for Russian wealth since the 1990s, so much so that London has been nicknamed Londongrad. UK Foreign Secretary Liz Truss says she's drawing up a hit list of Russian oligarchs, but we so far haven't seen additional oligarchs added to the list. And she has told members of parliament that she's received letters from their lawyers saying that they will challenge these actions. And I think that they're struggling to try to make sure that they do these sanctions in a way that's legally watertight. And that has been a struggle.
Stephanie, I think, first of all, it's an amazing piece. And I've already forwarded it to everyone I know because I think it's pretty comprehensive. I thought it was fascinating that yesterday we saw Abramovich say he's going to give his proceeds to victims of the war in Ukraine, and that Friedman and Avon, in your piece, you point out that they asked for the war to be stopped, but stopped short of criticizing Putin, and the same with Deripaska. So all of these oligarchs are saying, hey, we don't think this is a great war because they want to say it themselves, but they're not willing to go as far as to criticize Putin.
Absolutely. And, I do think that Mikhail Friedman and Peter Avon did go a bit farther by pointing the finger at Russia, saying Russia end this war, which is more of a direct criticism of Moscow than the other oligarchs. And so I would like to note that. But what you're seeing is that the sanctions are having an effect even on billionaires that have not been sanctioned, like Abramovich, who is already moving to offload assets because he worries that about the day that sanctions do come and his bank accounts and all his assets are frozen. So even if the UK is not sanctioning them, he's moving. The concern, of course, is that they're offloading assets before the sanctions come, and that defeats the purpose of them.
Indeed, trying to get ahead of them, perhaps. Bloomberg's Stephanie Baker, thank you very much. More Bloomberg surveillance is ahead. This is Bloomberg.